All right. Hey, security token market. Welcome back to another insider interview. I'm joined here with Oasis Pro Inc.'s founder, Pat LaVecchia. Pat and I have been going back and forth for quite a long time now. We know each other for a year or two. And Pat, thanks so much for joining us today.
Well, thank you, Kyle. It's always a pleasure talking to you.
So, we just had our Miami Crypto Week. I know that you were here. Everything's been so busy. What's going on with Oasis Pro? Can you walk us through the whole business and just give a brief introduction for anybody that hasn't heard of your company before?
Sure, absolutely. So, Oasis Pro Inc. is our fintech. Is basically a fintech blockchain company. One of our subsidiaries is Oasis Pro Markets, which is a broker dealer, full service investment bank, as well as a digital security ATS for secondary trading. We can also do primary trading utilizing digital cash for digital securities. So that means stable coins can be utilized to purchase and to receive in terms of a transaction with digital securities and what we call an atomic swap, which is really exciting. It's the next steps of the capital markets. We also have other subsidiaries in the crypto area, derivatives area, and we're expanding globally with partners. So we have a lot going on here. Currently, we're growing very rapidly. Our target by the end of this year is to have 50 to 60 employees. We're based.
Nice.
Yeah, thank you. We're based in the New York area, specifically in Connecticut, Darien, Connecticut. And the talent that we have here has been tremendous. A lot of folks have been commuting into New York City, et cetera, and maybe from a lifestyle standpoint don't want to continue that even with hybrid work. And we have these fantastic offices here, and it's very collaborative. And we've just been inundated with really high quality candidates as we expand in a number of areas.
That's tremendous news. So there's a lot that we can break down here. Certainly the word derivatives caught my ear because you're, I think, the first player in the industry to focus on some of those interesting pieces. But I don't want to get ahead of ourselves here. Let's talk about Oasis Pro Markets. We've covered it on the Security Token Show many times. People are very excited about new marketplaces coming to the security token space, just because of the fact that when you look at crypto, having a lot of different exchanges to be able to provide and trade these assets, it was crucial in driving not only liquidity for the existing assets, but also bringing and onboarding new assets onto these different platforms. So can you talk a little bit about the process of getting Oasis Pro Markets live? I know the ATS approval system has been something that certainly is a bit tumultuous. And so could you walk us through how that process went for you? And now that you're live, what is getting to the operational standpoint look like from where you're at today?
Great question. So it was a process, right? It was a journey. We did it in about 10 months, and which it was very, very quick. We received approval third week of December 2020. And but prior to our application, we spent a good 6 to 7 months really speaking to the regulators, understanding what they were looking for, what their hot buttons were, and we adjusted our application, based on much of the feedback that we got. But we did it in record time, as we understand it. We also understand, right now it's very difficult. Regarding going through that process, significantly longer, it was quite a process. And the regulators are working hard on this space. They certainly have gotten educated well beyond where they were when we started, which is a positive sign. But again, the regulators are focused on protecting the markets, and they're moving very, very slowly right now. So we got the approval. We started the process then of really building out all our tech. So we had the demos, et cetera, everything ready as we were going through the process. But once we got approval, that's really when we ramped it up. So we're really evergreen versus many of these other ATSs that have been around for a number of years. We've brought in some fantastic partners on that front who have global exchange building expertise, which we incorporated into our institutional grade ATS. and frankly, I viewed the market back then as probably 5 years out. Today, I view it as 3 to 5 years out. It's moving much quicker than I expected, which is fantastic. But I never saw a rush or a need to rush to the market and have our ATS operational, because the quality issuers, for the most part, unlike security token market and some others, really weren't there. And what our focus is really structured products versus equities. We do equities. We do anything with cash flow is really our focus, because we think that's where there's a tremendous use case for utilizing the blockchain, dividends, coupon payments, et cetera. The savings are tremendous, for these issuers, and that's been proven out in our discussions. So that's our focus, and our focus has always been, for the most part, working with premier partners. So we may start small, 10, 20, 100 million with the group, but with the opportunity to grow to much larger than that. So, we focused a lot of our time on what I call, the big dogs, the real, the tipping point players. So as they're TradFi, as they move into blockchain and then eventually DeFi, the institutions will take notice. So that was our strategy, December 2020, all the way through today. Our ATS will be operational and going with a number of issuers in end of Q2, beginning of Q3, June, July timeframe. Our primary is actually operational now. We did a soft launch in the last week or so.
Oh, great.
It's gone extremely well. And so we have a lot of that going on for us right now. But the ecosystem is growing. There's a tremendous reverse inquiry coming in. And, at the end of the day, unlike perhaps some of the other ATSs, we have both Wall Street and DeFi blockchain experience here. But, my background is 25 plus years Wall Street. We've brought in a lot of Wall Street folks. The tech is phenomenal, Wall Street and blockchain. And we'll talk a little later about our blockchain pedigree. But some of the other ATSs are more technology driven, more focused on, this is a much better system, blockchain, versus the current capital markets and trading, which is absolutely correct. And it's like, let's move in that way. Let's revolutionize the capital markets. Our approach is more along the lines of, this is more of an evolution. And we understand how Wall Street works because, hey, we traded. I've raised billions of dollars in different types of products, as has my team in a variety of different areas. So we've taken a slightly different approach.
So you're live now with the kind of the soft launch of your primary traditional broker dealer platform, not traditional, but the primary side. And then did I hear correctly? The secondary you're trying to mark for that Q2, Q3, is that with issuers that are in the primary side now that are either publicly registering or are trying to reduce their lockup periods in some way, or are those direct listings from other issuers that are looking to come from OTC markets or other traditional secondary exchanges that are going to be potentially coming to the security token space?
Yeah, great question. It's a combination, but for many structured products, there's no seasoning period.
Okay.
So if for equities, there's typically a seasoning period of 12 months. But for many structured products, there isn't, and we will have structured products on our ATS when it goes live. So no seasoning period.
Cool.
Some major Wall Street issuers, which we're excited about, and yeah.
So what is the pitch to them for secondary market liquidity for a structured product, which traditionally would be a little bit less sexy maybe for your retail investor? Maybe the cash flows is the argument. I'm not sure. I'd be interested to hear where your thoughts are around how secondary liquidity might be driven for an asset that's a little bit more structured.
Right. So the structured market on Wall Street right now, there isn't much of an order book at all. So structured products are typically invested by large institutions, and they hold them on their books. If they want to buy or sell, they have to call around the street, typically the issuing underwriter, as well as the co-managers on the deal. to get the best bid or ask. Pretty arcane. We've got an order book. What we're doing is taking that to the structured product marketplace, ease of use, but we're, instead of going out and getting numbers of subscribers like, the other ATSs, our view was, let's get the issuers to pull in the subscribers or traders. Again, a different approach. There are a couple of ATSs out there with, I don't know, 400, 500,000 subscribers, which is great, but the issues on those platforms aren't trading. So there's a disconnect, right? So I don't really believe they have that many subscribers. Whereas what we're trying to do, which, eventually they will, and we will as well. But I mean, there's just a major disconnect when you're claiming all these numbers and there's no liquidity. So, our approach is, hey, let's bring in these high quality issuers who already have a base of investors, and then provide those investors liquidity. So why are they moving? First of all, for many of them, it's a dip your toe, what I call a dip your toe. Dip your toe. So if you're a multi-billion-dollar issuer every year on Wall Street, or you're a $14 billion market cap company on Wall Street, and these are companies that we're in discussions with or have been, then take a couple of $100 million of your issuances and move it to the ATS and see the benefits. And what are the benefits? It's the blockchain. So we're digital to digital. We can do fiat as well, so fiat for digital securities, but that digital to digital is invaluable for the issuers, because instead of going down the process of where do I send the funds, right? Again, cash flow based, structured products or REITs, verifying the wire information, all that is part of the servicing costs that they pay. So we estimate, depending on the structured product, the savings could be anywhere between 20 and 50 basis points on the issue size. That's huge. And then if you're in the CFO's office or the treasurer's office, instead of having a third-party servicer handle all this, you can actually, you have all the wallet information. I'll go quickly through the benefits of an ATS. Perfect data, lower costs, increased safety, almost zero counterparty risk, faster payments, right? But you have an immutable record as well. From the CFO treasurer's office, it's time for the coupon payment. Boom, you have all the digital wallet. You have an updated cap table. Boom. That's the savings. That's the driving. Now, there's a secondary piece, but it's not immediate. So a lot of issuers only deal with institutions, large institutions. They want to grow their investor base, but it's very difficult to do because they're not necessarily equities. Structured products are in a completely different distribution network. But think about this, on our ATS, which can take accredited investors, retail, broker dealers through their accounts, and institutions, that after they dip their toe and they see the advantages of this, move to fractionalization. Have that opportunity then to democratize, increase their investor base for retail. So that's not this year, that's next year, right? And then DeFi, when is DeFi coming in? It could come in this year because we're looking at AMMs and collateralization, DeFi collateralization, yield farming, staking, et cetera, all those components. Is that a this year event for a lot of these issuers? Probably not. It's a next year event, and hopefully we'll get some more regulatory clarity on that.
So we have some big news to talk about, but before that, I've got one more question that's been a hot topic across the security token industry, specifically with relating to the secondary market activity for ATSs. And so there's a few of these ATSs live in the US, as well as different other exchanges, MTFs and others that are live internationally. And so one of the big things is this centralized versus decentralized component. And so some ATSs might argue that the SEC doesn't allow you to use blockchain as a primary ledger to track the changes in the cap table, while others would suggest that that's an outdated line of thinking. Where do you fall in on that spectrum? Is Oasis Pro going to be transacting on chain with every transaction with security tokens? Is it going to be in street name because of Section 12G? Where do you guys fall in line with that, and how do you see that changing over time?
Yeah, great question. Thank you for that. So we'll work with our issuers. Really, what the issue, because with an ATS we have flexibility. What our issuers really want, at the end of the day, we'll deliver on. So we can do all of the above, right? We can put everything on the blockchain. If for whatever reason they don't necessarily want it on the blockchain, it could be in more of a private blockchain. That's fine. In regards to the TAs and transfer agents and the record and blockchain, you're absolutely right. I mean, we heard that loud and clear many times as we were going through the process, that the regulators, and this hasn't changed, do not view the blockchain as a record. So you have the 3334 Act rules. You have all these square holes, and you've got a round peg which is blockchain trying to fit into them. It's not working, right? But we work within that system. I believe the blockchain is an immutable record. I think eventually the regulators will get there, but it's not going to happen for the next because of the uncertainty in DC, at least here in the US. But the EU has been very, very strict on security tokens as well. So I don't see many things changing there, or the UK. Asia, there may be more flexibility, but here in the US, it's going to take 3 to 5 years. But hey, let's go out 10 years. I think the blockchain is going to be the immutable record. Now, there's other big news, and we've talked about this. We're part of the executive advisory board for DTCC for private securities, private markets. We've been on that executive advisory board with 9 other companies for the last year and change, and they've been phenomenal to work with. So DTCC is moving, and they're very close to final approvals, I believe, with the regulators to utilizing DTCC's services for private securities, both equities, fixed income, and others, on the blockchain, Ethereum initially, and T+1. So this is a trial in a way before they move to T+1 on the public markets, equities. But this is both equities, fixed income, potentially other products, and it's on the blockchain. Now, DTCC has been around since 1973. They are Paxos is going after their market and others as well, but they're moving into this blockchain space big time. And when they're there, what is happening? T+1, they want to, in a way, there are many different areas of this, and your subscribers or viewers of this can easily go to their website, and there's white papers and actually also webinars on what they're planning to do. But from a TA standpoint, rather than an ATS and exchanges needing to work with each TA one-on-one from an integration standpoint, which is really expensive, and what we've been doing, DTCC is becoming the hub for that. And what that means is we can plug in, and then any and all TAs plug in to DTCC, and it's all interchangeable, interoperable. It's fantastic. And that's something we're really excited about. So eventually we'll get there, Kyle. Yeah, but we're not there right now, but we're moving.
That's a great answer. I appreciate your clarity. You're very diligent, and I think that everyone's going to be able to follow. It's been a fascinating developments in this space. But without further ado, it's time to talk about Oasis Pro Markets and your whole company. We've got some amazing news to talk about, so I want to give you the floor. Let's talk about what's going on for you guys and what we're kind of celebrating today.
Oh, great. Thank you, Kyle. Well, what we're announcing is the completion of our Series A. So we were, I'll just give a bit of history. So our blockchain DeFi pedigree is through MakerDAO ecosystem. And they're now offshoot VC fund, strategic VC called UDHC. So they were one of our seed investors, and we grew, have gone through this whole process. So we went out to do a Series A. So the Series A, just to share with everybody, was initially only targeted at 5 million because our tech was already in place, et cetera. Then within a couple of days, we went to 10, and then we went to 20. We really launched it in January of this year, end of the first week, and the focus was entirely strategic. My background on Wall Street is I ran private equity placements. I ran several groups on Wall Street, but I ran private equity placements for Bear Stearns globally, and I also ran it for Credit Suisse globally. So I know the private markets really well, and I know the advantages of strategics versus just cash. And not to knock VCs, et cetera. They're fantastic. We work with many of them, but the strategic value is what we wanted. So we moved to 20 million. And we're expecting it to take some time. By the end of January, we basically had it all done. And what we have closed on is well over $27 million. So, yeah, so we're really excited. We were at 5. We ended up at 27. Entirely strategic. And I can give you a sense of some of the players that came in. We have a lot of thought leaders in the blockchain space who invested on an individual basis, and this was at the Oasis Pro Inc. level. But we have Blizzard, the Avalanche Fund. Avalanche is a great partner of ours. We have Invinium, which is on the valuation side, great blockchain company. We have Redwood Trust. Redwood Trust is a New York Stock Exchange, ticker symbol RWT. Redwood Trust is one of the leading residential mortgage-backed securities players in the world. They're a TradFi player. They do billions of issuances every year. And the plan and hope is to take their issuances and move them to the blockchain. Amazing. So that's a bit of a tipping point. Again, these take time, and they've diligenced us, all these groups, very deep dives, and we're really excited about that. Another group is Trust Labs. We're very excited about Trust Labs, which are the creators of TrueFi. Mirai Ventures out of South Korea. Mirai proper is a $500 billion TradFi fund manager. Gate Ventures, which is Gate.io, the crypto exchange. And Ledger Prime, which is in the derivative space and a subsidiary of FTX. So that's just several of the players involved, along with UDHC, which I had mentioned earlier. And we couldn't be happier. We've already had those that did not participate because it moved kind of quickly. We closed in Q1, have come back to us. So there may be an opportunity. We've been approached to raise significantly more capital because of the quality of the team, the vision, the strategic positioning, and our global ambitions, that we may raise substantially more money in a Series B sometime this year. We've already had proposals come in, but we're focused on, we have a lot on our plate right now, so no promises on that.
That's fantastic news. I'm so happy to hear that. So let's talk about that for a minute then. So you started at 5. Clearly the goal is to scale up operations. What do you do with the extra 22 now that you have in the bank? How is that going to help you guys? And what's the roadmap, and how has that changed now that you have all this extra dry powder?
Yeah. So it's a great question. We have a lot. Our hiring plans are very ambitious for this year, as I mentioned, targeting 50 or more different areas. We are expanding into different product categories with our subsidiaries. So again, we're a fintech blockchain company. We do have the broker dealer Oasis Pro Markets, but we also have this phenomenal order book technology, institutional grade, that can be applied in non-securities businesses globally. So we have that. We also are very regulatory compliance forward. So we have that value add as well. So another aspect is launching new product matching engines in regards to different types of products. It could be crypto, or we'll work with one of our partners like Gate, or it could be secondary loan market on a global basis, which is not a security, but it's a $1 trillion market, many opportunities there. There's also the treasury market, right? Which could be our ATS, or it could be an offshoot of that, but a separate area. So these are all areas that we're exploring. And we have the benefit of having this capital in place, but we're stewards. We're going to be very wise with our approach and how we build this out. There's also potential acquisition opportunities for us, right? So we may be looking at that as well. So we have a lot going on there. We have fantastic advisors. We have a lot of if you go to our website, you'll see the list of advisors. We have Wall Street, we have blockchain, we have some very focused securities, digital securities, value add, what I'd say, luminaries on our advisory board as well. So we're exploring all this. We're also looking at potentially doing a token, not at our Oasis Pro Inc. level. We have some really cool ideas on that, and it's not tied to broker dealer at all. This would be completely separate. But again, we've got a lot of pedigree in the DeFi space. So that's an area that we're exploring now as well. So as you can tell, we have a lot going on. And part of what we're doing is we're taking a very methodical approach like we did. We got approved in December 2020. We're not launching until June or July of 2022 because we didn't see the need to rush. So that approach will continue for us going forward.
That's awesome. And I think that's a great segue into maybe what the future looks like for ATSs, for private markets, and what this is eventually going to build out. We talked about derivatives at the beginning. And I think that's an interesting place to start. For us, we've had, by tracking these markets, we cover a lot of this data. We make a lot of analyst reports around the industry and around liquidity. And one of those key pieces for market makers, which is something that what you might argue is needed in the industry at this point because of the fact that there's just not a ton of liquidity happening for a lot of these underlying shares. One of those big pieces for market makers is being able to hedge their exposure. And derivatives can be a great opportunity to do that, to be able to cover themselves from too much, actual exposure or risk to an underlying asset. And so let's talk about derivatives. I know that originally when Dr. Patrick Byrne from Overstock issued his digital dividend onto the T0 ATS, the argument was there's no short selling available in security tokens. Clearly, that's probably not going to last forever. What does it look like to create a derivatives market? Is that something feasible in the short term? Do you see that as a priority, and why do you see that as a priority?
Mm-hmm. Well, you're focused on the ATS for derivatives, right?
Sure.
So yeah, it's a priority. Liquidity, that's why we're looking at AMMs. We have 2 AMMs we're working with. We haven't...
AMMs, for anyone not listening, could you define that for us?
Sure, automated market makers. So
Great.
Basically, since we can do digital to digital, as I described earlier, you can actually do a pair, which is required, meaning a stable coin with a digital security potentially, and create a pool of think of it a pool which comprises a market maker, but you and I can be part of the pool if we own the underlying security.
And then get rewards for staking those assets.
Exactly. So we're exploring that. We've got 2, again, when we're going to release the press release on those 2 AMMs, we'll come to you and security token market.
We'll deep dive into it and figure out more about it.
Yeah. So that's why we're looking at that now. The TradFi market makers are moving into this space, but they really need to see liquidity, right? Yeah. And eventually, you're absolutely right. You need the opportunity to short, and that'll come over time. And when it comes, you'll see the TradFi players come in. But again, we're in the early, really early stages right now. But major milestones are happening. For us, I always talk about the tipping point. You need that tipping point, and then it's a tidal wave. And the tipping point isn't necessarily just one issuance, but it's like with Redwood Trust, our investor and our partner. Redwood Trust is a major TradFi player. So that's the beginning, or perhaps even further, of the tipping point. And once we get through all those aspects, some of these components like the TradFi market makers, they'll come into the market. The way when we talk about derivatives, we're actually thinking of crypto derivatives and Ledger Prime, and through their holding company Ledger. LedgerX are a prime example of that. So working with them is an area for us. So think of crypto. When I refer to derivatives, thinking of crypto derivatives, but also going back to structured products, since that's our focus, and you can create derivatives with cash flow. We think there's a tremendous opportunity there as well. But it's coming, but it's not going to happen in the short term. And
Right.
And some of the issues are, and many groups bring this up, is, the risk they run is without liquidity right now. They have, let's say their stock is trading at 100, right? And somebody needs to sell for whatever reason, a major liquidity issue. And all of a sudden it's trading at 60. Other investors are losing confidence. What is happening, right? And that's something that needs to be addressed in this market. Eventually it will be. Again, I think 10 years out, you and I will have a call, a webcast like this, an interview, and I'll say, remember 10 years ago where we were? And it's like, why didn't we do this sooner? That's where we're heading to, but we have to go through these,
Right.
these bumps in the road along the way.
We'll have a little flashback that pans in with this clip right here.
I love it. I love it.
Great. Well, all that is fascinating stuff. What else? Is there anything else on your mind you wanted to talk about? Certainly, this is I think, going to be a regular thing that we're going to be able to catch up and share updates from your end. And I know that there's everything going on. But anything else that you wanted to talk about on the show today?
Sure. Well, I'll just address one more item, and we're big fans of yours and Security Token Market, the entire team over there. You guys are fantastic.
Thank you.
I think we've gotten the question about, I mentioned number of subscribers out there. Some have a lot, some have very few, and I think Robinhood has come up. Like, we're the Robinhood of crypto.
Right.
But the difference is why we're not going that route, and we may be wrong, but this is how we view it, is Robinhood came along and the rails, meaning the infrastructure, has been in place for like 40 years, right? Schwab, and then it progressed, right? There are no rails right now in the digital security space, right? They're being developed. That's why it's so difficult to get to that liquidity. So that's why we haven't taken that. Again, we may be wrong. And I don't view it as, some out there view this as the electronic trading market from the 90s into the 2000s. There are a lot of comparisons, a lot of similarities to that. Absolutely. But again, those rails were in place for decades before the electronic market came. So, that's part of the bumps in the road that we're going through. That's why there isn't a Robinhood at this point in time. That's why crypto is very different from digital security tokens. Crypto developed their own rails,
right?
And they're unregulated, so they were allowed to do that. So I think, again, 10 years from now, maybe 5, this is going to be ubiquitous. But right now, I think working through the regulators, not only here in the US, but globally, is going to take some time. The other question that's come up with us is, and others, we want to see the ecosystem grow. Yeah, there's not going to be one winner. There's going to be many winners, right? We took the risk, and just, again, based on our capital raise, thank you again for letting us announce it.
Of course.
With you guys, there's a lot of interest in this space, and smart strategic investors see the opportunity. But the question has come up about a central order book, and the ATS is all working together like they did with the electronic trading firms.
Right.
Again, the rails aren't in place yet. So, hey, if there's a fantastic issuer and it's of size, right? When I say of size, 100 million, right?
Mhm.
To, whatever. So there's a liquidity there. And the institutions that are our subscribers would like us to give them access to that. Absolutely, we're open to that. But again, we're taking, as we view the market, we want to be really careful that we're not looking at the old models and are trying to apply them here. We think this is an entirely new model. And I just want to share that with your viewers. That's our approach.
Amazing. Amazing. I love your attitude. You're a happy guy. You're positive and energetic. And I think that the industry could use more founders like you, Pat. So thank you so much for joining us today. I can't wait to actually announce this to the world. We're doing this a little bit before everybody else gets to know, which is exciting. And I look forward to seeing you in person sometime soon. So before we close it out here, where can anybody find more out about Oasis Pro Markets, about you? How do we stay in touch? What's the deal? Give us the rundown.
Great. Thank you. We have Twitter, we have Instagram, we've got LinkedIn. So you can connect to any and all of us, Oasis Pro Inc. and Oasis Pro Markets. Currently, our website is that's live is Oasis Pro Markets. So you can see some of our team members there. And you can contact me directly at pat@oasispromarkets.com. Happy to take in any questions, hop on the phone. So again, really appreciate it, Kyle.
All right, man. Well, thank you everybody for listening. Check out Oasis Pro Markets. Come on, this is an all-star we've got here on the show today. And like, subscribe, follow us. You know where to find us, STO Market, for all of your news in the security token space. We're spreading the gospel. Pat, thank you so much. We'll talk to you next time.
Great. Thank you.